Hi, how are you? My name is Marty Hernandez, licensed real estate broker, and today we are going to talk about the different financing schemes to acquire a real estate property here in the Philippines. This is the easiest and fastest way to buy a real estate in any part of the Philippines. Spot cash payment means the buyer pays the price of the property in a short period of time in cash, which is usually 1 month after the date of the reservation. If you have the extra funds to buy a real estate property right away, I suggest to use this payment scheme because paying in spot cash usually comes with discounts. Another advantage of paying in cash is that it requires less requirements since you're not going to submit documents in banks or any government bodies. You also have the peace of mind since you won't have to worry about long-term monthly payments. Processing and receiving of real estate documents will also be shorter since you can get the title right away after executing the deed of sale and paying the necessary taxes. The only downside of this financing scheme for me is that it requires a lot of money and most people can't afford to pay in spot cash, especially in this pandemic. Next one is bank financing. After paying the equity or the down payment, the buyer loans the balance of the property from a bank. This simply means that the bank pays the developer or the owner of the property, and then the buyer pays the bank monthly. This property will be under the bank's name as collateral just so the bank can go after the property in case of non-payment. The amount of the loan that the buyer can get will depend on the following. Number 1 is gross income. Number 2 is age. Number 3 is stability of occupation. Number 4 is property's appraisal value. And number 5 is credit history. Lenders offering conventional housing loans charge an interest rate of 6.5 to 12%. This rate is fixed for the first year, first 2 years, first 5 years of your loan, depending on the agreed period, and then once the period ends, interest rate will depend on the prevailing market value or market rate. When you try to apply for a home loan, it is not 100% that you will get approved. The possibilities for disapproval are the following. Number 1 is your lender is not convinced that you can pay off the amount you wish to borrow because your gross monthly income is not enough. You can get an idea by doing this computation. Get the monthly amortization, then multiply it by 3. That should be your gross monthly income. Number 2 is you don't meet the eligibility criteria, like maybe you're over 65 years old or you're not a Filipino or maybe you're a minor. Number 3 is you fail to provide the necessary documentation. The advantages of taking a bank loan as your financing option are as follows. Number 1, longer payment terms compared to in-house financing. The longer the years to pay, the lower the monthly payments. Number 2, for sellers or developers, you're going to be paid in full amount or depending on how much the balance is. Number 3, the title will be in the bank. Actually, this point is both an advantage and disadvantage for me. It's an advantage since you're not going to worry about keeping your title safe at home. On the other hand, the disadvantages are as follows. Number 1, the longer the term or the more years you pay, basically you pay more interest. Number 2, strict bank terms of approval and on late payments. Number 3, again, the title will be with the bank. This is a disadvantage in terms of you're not be able to hold the title, so there's a feeling of there's something missing, and there's also a probability that the bank might lose or destroy it. Well, I hope not. Number 4 is bank fees. Bank fees are relatively expensive, so if you're going to loan from the bank, expect to pay a hefty price. So moving on with number 3 financing option is Pag-IBIG financing. Pag-IBIG financing is one of the most popular among Filipinos because of the longer terms and lower interest rates. In this financing option, just like through bank financing, the buyer pays the equity or down payment first, then the balance will be financed through Pag-IBIG. Payment can be up to 30 years. Loaning in Pag-IBIG is also flexible since the Pag-IBIG loan can be used for the following. a purchase of a fully developed residential lot, or adjoining residential lots not exceeding 1,000 square meters. Next is home improvement on the house owned by the borrower or a relative of the borrower, or on a property currently secured under the contract to sell or deed of conditional sale between Pag-IBIG fund and the buyer. Next is refinancing of an existing housing loan, and a purchase of residential lot or unit plus cost of the transfer of title. Just take note that the maximum loan that you can get from Pag-IBIG is 6 million pesos. So what are the conditions for applying for a Pag-IBIG loan? Number 1, you should have at least paid 24 months or monthly savings or a lump sum payment of the required 24 months savings. Number 2 is you're not more than 65 years old and not more than 70 years old maturity of the date of loan application. Number 3 is you have the legal capacity to acquire and encumber real estate property. You should pass satisfactory background, credit, and employment business checks of the Pag-IBIG fund. Next is you have no outstanding Pag-IBIG fund short-term loan in arrears at the time of the loan application. Next is you have no Pag-IBIG fund housing loan that was foreclosed, cancelled, and brought back due to default or subject to dacion and pago. If with existing Pag-IBIG fund housing loan account, either as principal borrower or co-borrower, it must be updated. Just a quick break, have you heard of the term dacion and pago and wonder what it means? Yeah, I think we mentioned that before. Dacion and pago is a Spanish term which simply means handling the keys of your property back to the lender or the bank. Anyway, back to our video. The following are the advantages of loaning in Pag-IBIG. Number 1 is longer payment terms. Since you can loan up to 30 years, home buyers can opt for short-term loans and lower interest rates as low as 6%. The following are the disadvantages of loaning in Pag-IBIG. Difficult for some to pay for the equity since the maximum loan is only up to 6 million pesos. More requirements compared to other financing options. Longer processing of documents compared to other financing options. Before we go to the next financing option, here's a tip for the home buyers out there. Ask the agent or the seller if the property you're eyeing accepts Pag-IBIG financing. Keep in mind that not all properties can be loaned through Pag-IBIG. Our next financing option is deferred cash payment. Deferred cash payment means the total price of a real estate property will be divided equally in a given period of time. If you see the phrase no down payment required, no interest, then it usually uses the deferred cash method. The following are its advantages: no interest rates, no down payment, shorter period for the processing of real estate documents, and some developers give discounts. Its disadvantages, on the contrary, are shorter terms means bigger monthly payments. Next is in-house financing. In-house financing is taking out a loan directly from the property developer to acquire a condominium, a townhouse, or a house and lot. Compared to a bank loan, in-house financing is less stringent on the requirements and the approval process. Whom is this for? For who? Buyers who cannot provide documents required by a bank such as proof of income. Buyers who will be financially assisted by a foreign spouse, parents, or relatives. Buyers with unsatisfactory credit card payment history, or those who have an unpaid loan from a financial institution. Advantages. It's easier because you require less documents. There's no third party because you are direct with the developer. Disadvantages. The interest rates of in-house financing tend to be higher. They can be within the range of 14 to 21%. Also, while a bank loan payment can be extended up to 20 years, in-house financing requires a shorter time frame. Our last financing option is rent to own or lease to buy. Basically, it is being able to rent a home that you can buy at some stage in the rental period. Down payment is usually 10%. Things to put in the contract that you should keep mind of: the duration of the lease term, purchase date, actual sale price, and the rent-to-own premium. Advantages of the rent-to-own: appropriate for buyers who cannot afford to pay for a huge down payment, to lock the property's present price even though the actual purchase may happen after end of the lease term. To test drive the property to know if the property will be yours or if fits your needs or wants. Faster way to dispose of a property, earn income while waiting for the consummation of the sale, and demand a higher price if you're a seller. The disadvantages of rent-to-own or lease-to-buy are the following: no refund, stricter policies on payment. Rent-to-own properties usually are pricier than normal properties. As a seller, you start again with the process of searching for buyers after the contract ends, and you do not get to enjoy a huge lump sum payment. So that's it. If you have questions, you can write them down in the comment section down below. You can also answer questions posted by our fellow real estate people. I hope you enjoyed. I hope you learned something new today. This is Marty Hernandez, licensed real estate broker. I'll see you in my next video. Keep safe.